As investors, it's easy to get seduced by the great returns, the stellar returns of the big companies of the world. At the moment, that's the likes of Microsoft, Nvidia, Alphabet, Meta, Tesla, Amazon. We look at these returns and we want to have a part of that. We want that in our investment and pension portfolios so we can benefit from those strong gains. I'm Andrew Neligan, and in this video, I'm going to explain why that strategy may not be serving you as well as you'd hope. What we've got here is some data provided by Dimensional Fund Advisors. Dimensional are one of the largest asset managers in the world, and they invest in companies the world over. And what they've looked at is the performance of the top 10 companies in the US stock markets and looked at their relative performance to the market as a whole, as US stock markets as a whole, prior to becoming one of the top 10 companies and the preceding periods after they entered the top 10. And what you can see is very insightful and very interesting. The green bars here shows their outperformance relative to the market. So these are the companies that are soon to be in the top 10, looking at how they performed in the period before they entered the top 10, and how their individual share prices on average, so we're looking at average returns here, performed relative to the market. So you can see 10 years before, the average company before it entered the top 10 had an outperformance of 11.8%. So its shares grew on average 11.8% higher than the US market as a whole. 5 years before, that outperformance was 20%. 3 years before, even better, over 27% outperformance. But look what happened after they've entered the top 10. So after they're one of the top 10 companies in the US, you can see the returns are underwhelming at best. In the 3 years after entering the top 10, the average share price return was only 0.5% better than the market as a whole. But you hold that company longer, you suddenly get them on your radar and think, there's a company for me. I'm going to buy and hold that in my pension or my ISA. You can see if you held it for 5 years, they've underperformed the market by nearly 1%. And you held it for even longer, over 10 years, they've underperformed the market by 1.5%. Now, that's not saying the shares have necessarily lost value, but on a relative performance to the market, they have underperformed. And that's because prior to joining the top 10, when there's less known about these companies, the growth opportunity is much bigger. So investors look forward to say, what's the opportunity? What's the chance of me investing in this company and getting a return on my investment? And there's a lot of opportunity to go at. But as soon as they enter the top 10, a lot of that return is already priced in. So it's very hard for companies to continue to surprise and delight investors and exceed expectations, which is why the rest of the market as a whole catches up and overtakes on a relative return basis. A much more prudent and sensible long-term strategy, whether that's in your pension, your ISA, or your investment accounts, however you're investing, is to invest broadly and own the whole of the market, not just in the US or the UK, as we're prone to do as UK investors, but invest in the great companies of the world today and the potential leaders of tomorrow. And that way, we know we're going to get the best returns we can get relative to the market. And we're not going to put all our fortunes in one or two big name companies that may end up just disappointing us, because it's always hard to know when to sell a company when it's at its peak. But if we've invested in thousands of companies around the world and spread the risk by investing in government bonds and the debt of companies around the world, we've got an appropriate mix of higher risk and lower risk, balance our expectations and balance the returns and the risk that we're willing to take to achieve our unique priorities. So that's all I wanted to cover today. I hope you liked it. If you did like it, please do click on the thumbs up button. If you've got any views or experiences of investing you want to share, please do put it in the comment section. If you want to receive these videos as and when I upload them, please do subscribe. And if you want to know more about how I help my clients as they plan for their retirement, please do visit neliganfinancial.co.uk. In the meantime, thanks for watching.